Welcome back to the channel, everyone. On today's video, we're going to be discussing Brookfield Renewable Corporation. It trades under ticker symbol BEPC on the Toronto Stock Exchange. You can also buy it under ticker symbol BEP.UN. Now, quickly, I'm just going to touch on the difference because people seem to be confused and they always have a lot of questions about it. So if you're going to buy ticker BEPC, it's best to hold this in an unregistered account because you would qualify for Canadian dividend tax credits on it. If you would like to purchase ticker symbol BEP.UN, that's going to pay distributions instead of dividends. Therefore, it's better to have that in a tax sheltered account, such as a tax-free account or an RSP, because it actually just pays distributions. Now, if you want just the highest yield possible, you're going to want to purchase BEP. The distribution will pay out a higher percentage yield. Okay, so there's just a quick little overview of where to hold each different ticker. Now, up on the screen here, I have the Brookfield investor presentation. This is from the end of the year, Q4 2022. And I'm just going to highlight what they thought was important enough to highlight. And as you can see here, the fund wants to grow its distributions by 5 to 9% annually, okay? And they anticipate an overall return of 12 to 15% if you include share appreciation and distribution increases. Now, I don't know about you, but 5 to 9% distribution increase per year is really, really good as long as it's sustainable in the long term. I think that's a 10 out of 10 for me. I love that. And if we take a look here, we can see their distribution increases since 2014, and you'll notice it goes up and to the right. Then that is because it has a 6% CAGR year over year, which is in line with the 5 to 9% distribution increase. Now, I've held this stock for 2 years now, and the increases have been around 5.5%, which is more than fair on a regular period in time that really dominates inflation. So that's kind of what you want, or it's what I want for my portfolio going forward, because that's really going to compound if you hold this thing in the long term. Now, you also see here that since inception, the total return, which includes distribution and share appreciation, for the Toronto Stock Exchange ticker, it's 15%. For the Americans, they have 16%. So it's relatively in line. No big difference there. And that 15% number for us here on the Canadian side, that's on the higher end of the total returns that the company expects you to have if you hold this. Now, if you buy this thing and it drops whatever 10%, just hold it. It's fine. Don't freak out. Over a long term, I believe in this company. So, getting this 15%, this is if you bought it when they're calculating it. I happen to be down around 8% on this stock right now currently, and I'm fine with that because I'm not too worried about it. I'm here for the distribution increase and the slow and steady tick up over time. Brookfield is highlighting here that they have a strong financial position. I mean, pretty much any company's investor presentation you're going to look at is going to say something to this extent. However, this is actually correct and true with Brookfield because they have the Brookfield Corporation, the mothership, backing this company. So they have access to a level of capital that other companies just simply do not. And that's really, really important. And I cannot overstate that enough. That's the difference between this renewable energy company and the ones that do not do well and the ones that have folded or cut their dividends. Another important piece of information here is their investment grade. They got a BBB+, which is really high rated, and this is not something you tend to see on a renewable energy company or a utility company at all, to be honest with you. Another key point here is the hydroelectric generation. Now, you'll see it says 53%. A lot of renewable energy companies have high percents in wind or solar, and those are not favorable in my opinion. We'll touch on that in a little bit, but this over half in hydro. This is actually why I like this company, and like I said, we'll touch on that in a moment. Now, take a look here. I want to talk about their footprint around the world. Now, we have 11,000 of their megawatts coming from North America, which is the most, granted, but take a look at South America, 7.7 thousand, Europe, 4,000, and Asia Pacific, 2.7 thousand. Why this is important is because this company has a global footprint. Now, a lot of Canadian companies invest mainly in Canada, and that's their base of operations. Most of their business, most of their income come from there. Now, you can see that BEPC, it has a worldwide footprint, and they're just growing on that. They have more to do in these other continents, and that's really going to increase diversification, and it's very favorable. Putting in these renewable energy utilities in these different countries cost different amount of money, their upkeep costs different amount of money, and there's more favorable conditions in these other places as opposed to just North America. So I like the wide diversification here that we're getting by buying BEPC. On the left here, we can see how their assets are diversified, and 53% of it is hydroelectricity, like I had alluded to before. Now, why it's my favorite is its longevity. Now, hydroelectricity projects on average last around 100 years. So, there is a humongous upfront cost, but you have an asset now for 100 years. It's for a full lifetime for people. Wind and solar projects are much more likely to be recycled. All utility companies do capital recycling programs, but the hydroelectricity dams, since they last so long and require relatively minimal maintenance, those tend to be keepers and long-term producers. So that's why I like it. That's why I like Brookfield's portfolio here. Now, all utility companies have a ton of debt. They're highly leveraged. That's this is the nature of the beast here. So what I want to talk about is Brookfield's. They have 97% in fixed rate financing. So obviously the interest rates are going up a ton. So, the higher percentage in fixed rate is better and more accretive to the bottom line. So it's really, really good. And they also mention here that their debt is laddered. That is also what you want. And what's really particularly rare is that they have 9 recourse financing. Therefore, if they run into a problem with a particular asset and they owe a lot more money than it happens to be worth because of whatever macro factor that we're dealing with, they can walk away from the asset and the bank will just take it over, and whatever debt has been accumulated, Brookfield Renewable is not going to be responsible for. This is really, really rare because, this is not good for the banking institutions lending money. So for them to even sign paperwork agreeing to this, it means that they really believe in Brookfield. They want to have a good working relationship with them. This is super rare, guys, and this is really of note here. Keep it in mind. So I just went over why Brookfield Renewable is a great company, in my opinion, why I hold it. It's not going to be a huge 30, 40, 50% gainer in a year. It's just going to be slow and steady over time. And that's kind of what you want out of a utility company. It's what you want in your portfolio, to be honest with you, because you can have some high flyer stocks, but you need a base of steady eddy stocks that just go up slowly over time. And this is one of them. Let me know what you guys think of Brookfield Renewable, if you love it or hate it. If I've missed something, let me know. I'm always interested to hear other people's opinions on companies I like. I'd like to hear why people don't like them, to be honest with you, just in case I missed something. So that's Brookfield Renewable in a nutshell, guys. I hope you enjoyed the video. Like and subscribe. See you in the next one.